Hello and welcome to the Week Ahead video. Quite a lot of focus this week, of course, on those key central bank rate decisions towards the end of the week, as well as both the European Central Bank and the Bank of England's latest monetary policy announcements. Starting off with the ECB, they are actually expected to keep rates unchanged, with the main refi rate at 0.5%. But a lot of eyes will be on that press conference to see if there are any further hints towards a possible negative deposit rate. This is still a theme being posited around by a number of ECB members, but there still seems to be a bit of a lack of unity among the executive board into actually putting this scheme into play. Additionally, any commentary on non-standard measures will be carefully watched, particularly this asset-backed securities market normalisation scheme, wherein there are lower financing costs for southern European small to medium-sized enterprises. So that's due to take place on Thursday, which will also see the Bank of England monetary policy head Mervyn King's last meeting at the helm of the Bank of England. So they are also expected to keep their rates on hold at 0.5% and the asset purchase target at £375 billion. In terms of data heading into both of those central bank releases, they've both been faring slightly better. We've had manufacturing PMIs on Monday from across the Eurozone and the UK, both coming in much better than forecast, so possibly lessening the need for further monetary easing in the near term. However, as we progress through the rest of the week, we have services PMIs completing that picture and giving the latest outlook for growth across the monetary union on the continent. But then, of course, on Friday we have that non-farm payrolls report, which was always carefully eyed, particularly as a note of health for the US economy, but also for the Fed's bond buying programme. They do continue to remain data dependent, so even if we get a number outside of expectations, that often has a bit of a twist in terms of the market reaction, as a lower number means more QE and a higher number means the Fed could taper purchases faster than previously expected. So of course we'll bring you all of those releases as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic week.